The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We're going to take a look at the German DAX like we usually do, starting out with that smaller pattern. You can see we had a little choppiness, a couple of ABCD patterns after the big run-up, and the daily chart has still reached a major 61% retracement level. If we go to the FTSE, we'll get that up here. You'll see that we're a little bit lower today on the FTSE, but still in an uptrend, making some ABCD patterns. And then if we go to the smaller time frame here on the FTSE, you'll be able to see the expansion of the three drive to a top pattern that we have going on at that time. By the way, folks, our guest today will be Shane Smolyan, the Wolf Trader. Tomorrow we'll have Andy Pancholi from the UK talking to us about some more cycle things. So that will be good. Let's move on. And I had a couple of questions. One of the questions was a very interesting one. First of all, let me go over what happened yesterday in the Nasdaq. I wanted to get to your attention. Here's what we were looking at in the Nasdaq. If you recall that ABCD three drive to a top pattern, I want to show you what happened yesterday because it's probably going to happen again today too. At least that's what it started as. Here's what happened after we made the top in that Nasdaq. If you like ABCD patterns, folks, look at this. You had a major ABCD. You take out the high of the low of May 22nd, make a 1.618 expansion, and the market rallies 300 points all the way up to 94.80. And you can see the pattern that we had going this morning. It's another Gartley pattern, another ABCD down here. So there's nothing bearish about this until we take this out. Now, there's a big difference, of course, between the Nasdaq and the S&P and the Dow Jones. The Dow Jones is the strongest, followed closely by the S&P, but the Nasdaq has these lower tops here, which is a little bit troubling. But, the fact that we held major support this morning is still very, very important, in my opinion, just looking at some of these things here. Now, someone asked me a question, how did I make a transition from working for Eli Lilly for 11 years and then becoming a trader? And I'm going to get this chart up here and show you, folks. I started with Lilly in 1964. I worked with them till early 1975. And I decided that was the worst time in the world for me to change jobs because I had just gotten creamed during that October 74 crash. And I had gotten the book, the Gartley book from Profits in the Stock Market from Don Mack, and he showed me that ABCD pattern. At the same time, Oscar McClure and Dave Nelson were showing me the bullish fundamentals that could come because of El Nino. And so at that time, there were spreads going on in oil and stuff. But anyway, that big Gartley pattern where the blue arrow is on the bottom is where I started buying a little bit before that time. But it was about 3 or 4 weeks early, but still not below the D point. It was right there. And I got out on that high tick, the high tick. That was it. That's where I got out. And that's the day I said, I'm going to be doing this for the rest of my life. And that was in June of 76. It was about 9 months later. And shortly thereafter, I went to work for Drexel Burnham Lambert as I ran their commodity department for a while. I was the only person in it, and then I hired 20 men to work with me and a couple other guys. So there were 4 of us in there, so that's what I did. But that's how I did it. What happened was at that low blue arrow there, I told the ex-wife that I wanted to do this, and she said, well, if you can give me 1 full year's of income, we'll decide to do it all through 76. If we can make it through 1976, give me 1 full year of income, including everything. And I said, what's that figure? And she said, it's $62,000. And so it was hard for me to do it because I couldn't use the margin to buy more. Probably would have made a lot more, but it wouldn't have made any difference. So I did that, and it turned out to be okay. And in about February of that year, I knew that I was on the right track. Once I started looking at that Gartley book, folks, and looking at those patterns in there, especially on pages 221 and 222, I knew that there was something really important there, and I was going over all of my charts from the commodity perspective that we used to get every Saturday. And I could see these patterns over and over again. I already knew the ABCD patterns, and I knew 618 and 786. I didn't know much else other than that. And when I started to see them repeating over and over again, that's when I really knew that I would be able to do this. So that's how I got started doing it, and it's been a pretty fun job. Stop to think I'm at the 8th furlong pole and still doing this and enjoy doing it. That's a good thing. I watch these people on TV, and my goodness, some of them, they get old at 60, and I certainly haven't had that happen yet, but you never know. You never know when the trading gods are going to come in and knock you on your head. Folks, there's a chart out here that is extremely bullish. I want to show it to you. It's something that we've been watching for quite some time, not even trading it, but let's just get this up here and take a quick look at it. This is the chart of silver. You'll notice here that we've gone above the 78% level, folks, and we've stayed there for 10 days. Are you kidding me? I mean, that's some type of accumulation. Now, we're not seeing much in the open interest, but the fact that this thing is staying up here at this level is not bearish. I mean, look at that. You gapped up into the 78% level, and you stayed here. No, look at these charts. After you have these runs, it always backs off. This time, it's not doing it. You just don't see those high-level consolidations very often. So pay attention to this. This could be one heck of a run. And if we look at the gold, which we are bullish on, you'll notice yesterday. This is a 4-hour chart, and yesterday in the gold market, you came right down, and you'll see you made right to the 78% level at 1705, okay? 1702 was the low, and now you're trading at 1739. You've already exceeded the 61% retracement, and just a little bit higher, you're going to be up around 1745. And the ABCD, if this happens to take off, takes you way above 18. I don't know, and it started the right way. So my guess is that you want to look for, if it backs off, look for a little retracement, but it's got a chance here. Now, the other part of this chart here is look closely at this gold chart, because you could have a head and shoulders pattern forming here, folks. If you look at the left shoulder there, it could be on May the 8th. Okay, and the right shoulder could be coming in anytime right now, and that means that this thing's got to get above 1745 to break that head and shoulders. So keep that in mind. Now, that brings us to another question: is how is the relationship between silver and gold? Folks, they're different. I mean, you've seen the strength in the gold market over the months where silver's been lagging badly. So we really don't know the answer to this. And the second question is about the fundamentals. Folks, I know nothing about the fundamentals. I look at the charts. If people are buying it, it's going up. If people are selling it, it's going down. Look at the stock market, for crying out loud. We got the most bearish things in the whole world, and it goes up every day. How do you figure that one? 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks. I posted a chart, a 30-minute chart, I believe, of the, let's see what time frame it is. It might be 60-minute chart of the Treasury bonds. You notice it's been in a downtrend since we hit that 78% level at 82 and change, 182 and change, and it still looks like it's going lower. This means interest rates are going higher and not lower. I know that's difficult for the people that publish the stuff on Bloomberg and CNBC, but that is in fact what's happening in the real market. The shorter-term rates are probably still holding up, but the longer-term rates are backing off quite a bit. The other part of this chart that I have to explain is that several people have asked me, why don't I use oscillators and moving averages? And folks, the reason why is I just found something many years ago that's really simple, and it works most of the time. It doesn't work all the time, but it works probably 6 out of 10 times. And if you use a little bit of common sense, you can probably skin this cat once in a while, and that's what we try to do. But the oscillators that you see are they're lagging indicators, moving average, stochastics, Williams, percent R, all of those things, MACD, they all are. When I used to go to Commodity Corporation, when I was there, this was long after Amos Hofstadter had passed away, but they were still using the program that he and Jay Crosp had put together, and basically what it was a volatility breakout system. And Goldman Sachs bought Commodity Corporation mainly to get that program, and it was really nothing more than a volatility breakout system. In other words, once a market was in a congestion phase and it came out of it with a strong with strong thrust, they were on it. And sometimes they get turned around and went short the other way, but that's how it worked. It was quite simple. They went through all of these things. They never found a system. I mean, I know you can use some of these things, but for a long period of time, they found that the best thing to use for them was a volatility breakout system, and that does. So, and what we're doing when we're watching pattern recognition is we are watching for that volatility breakout. In fact, if it does occur, that's what we're really looking at. For instance, when we were looking at that silver chart just a minute ago, that's what you want to be seeing. Once silver clears that 1810 level, that means you're breaking out. You've had a 10-day consolidation at a very high level, and it reminds me of the old saying of Jesse Livermore: "Don't be afraid of high prices, son. They're there for a reason." So that's the main thing. The cure for high prices is high prices, because they get high enough, demand will slacken off a bit. The cure for low prices is low prices. They get them down low enough, demand will come in, and that's what you're trying to do. I had a question about the Bitcoin. Here's a perfect example of that type of thing. Let's get this up here. You notice here in the Bitcoin, we're getting very, very close to pulling back to this $8,000 level. We're trading at 8,900 today, and if we get down to 8,000, pay close attention to that, folks, because that's going to be a beautiful ABCD pattern. If you trade cryptos, if you don't, it's no big deal. But watch that level; it could be very, very interesting. Very, very interesting to watch that level, come to light as it gets going through this time here. So we're looking at it right here. Okay, here now we had another question that someone asked, which was about, oh dear, what was it? Shut the front door. And about the seasonal chart that Bill Meridian had posted yesterday in the gold market. I want to get this up here and see here that this is the seasonality. In other words, you'll notice here that during the June-July period, the seasonality for a big move, is, especially during June, is quite bad. And here we have, gold looks like it's ready to make another move. Now, these seasonal patterns don't work all the time, folks. As you know, nothing works all the time, so pay attention. Perfect example, stock market, sell in May and go away. That's usually a pretty good one, but it's only right about 50% of the time. So keep that in mind on the seasonality, that they don't always work the way that you think they're going to work. So keep close tabs on that. There's one other thing that's very important going on today, and that is in the U.S. dollar. Let's get this up here. Take a look at it. Here is the dollar. We're taking out, we've made new lows now 3 days in a row, as you can see here. We still haven't taken out the lows of March, but should we do that, we'd be looking at a pretty steep move down to that 95.50 level, which would be pretty much a double bottom to the March lows. So it's very, very important. Now, why the euro would rally, and the euro is 53% of the US dollar index, why the euro would rally during that time, I have no idea, but, nobody else does either, but just follow what's going on. We hear, Shane will probably, lighten us up a little bit, enlighten us, I mean, not lighten us up, but take a look here what the Federal Reserve has done here, folks, as far as putting money into the market. You can see, I've shown this 7 times, we're at this $7 trillion level, and they're thinking of doing some more. So this is a big, big move. So let's remember that this is some of this stuff has got to be repaid someday, but who knows? There's a lot of talk that the U.S. government is going to tell China to take a hike and not pay the interest or not redeem the bonds, which that is not going to happen. If that happens, that would bring chaos to the market, and we certainly didn't want to see that happen. So let's remind ourselves that what's in the news is not always what we think it is, that's for sure. And a lot of things going on in the world. You can see what's happened in Minnesota with the tragedy that happened up there. Hong Kong has their problems. They have a big meeting today on what the new law is going to be coming in from China on what they're going to do to Hong Kong. They're going to stop the rioting and the Molotov cocktails and stuff. And when I saw in the news this morning that in Minnesota they were throwing Molotov cocktails and looting stores, this is not the United States that I knew, folks, but that's neither here nor there. When I was a kid, the biggest thing that happened was the school busing, and there was a little bit of a problem. Yeah, there was some probably more than a little problems, but nothing like that. Person throwing a Molotov cocktail, folks, is no longer a protester. He's a terrorist, because you can really, really hurt somebody fatally with a Molotov cocktail, and those are things that we really don't want to do that. You want to see what's going on here. Okay, we have about 1 minute to go, then we'll have Shane on, and tomorrow we're going to have Andy Pancholi from the cycle guy from the UK who works for the Foundation for the Study of Cycles. He will be our guest for Friday, which will always be a lot of fun. And let me see, then we got, by golly, guess what we've got? On Monday, I believe we've got June 1st coming in, isn't that right? Shut the front door. June is here. Oh, my goodness, we're going to be... have to celebrate the spring equinox here pretty soon, or no, summer solstice. Sorry about that, the summer solstice. Okay, another questions. The civil rights in my time, Ruby. I mean, I grew up in the 50s and 60s, and I grew up in Terre Haute, Indiana. There was no segregation there. We grew up all together. I mean, blacks and whites together. I mean, there was never anything. In fact, as an old joke I used to have, and I really meant this, I didn't know what segregation was till I got to college. And, I got the people from other parts of the country that, thought differently about different racial groups than I did, so that's neither here nor there. Hey, look, I think that God created us equal. We have to sort out what's right. Hey, let's take a little break here. We'll have Shane Smolyan coming up here at the break.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Shane Smolyan on the line. Shane, are you there?
Good morning, Larry.
How are you? Good morning. I'm very good. We have a question from one of our listeners to start off, if that's okay.
Sure.
And the question is, how much of the $3 trillion has the Fed put in to the bonds and stocks? Do you have a number on that?
Okay, so I'll get to that. What's happening is that, okay, so you showed the chart earlier of the total assets on the balance sheet. So that doesn't tell the whole story. There's multiple operations that are going on by the Fed, and I track all of these operations, and it's really becoming difficult to do. But the thing to understand is that they are now starting to move into the corporate bond market, and they're going to open a Main Street lending facility. The corporate bond market is the direct purchases of the ETFs, which I have a chart to show that. And they started out with about 600 million with that now, and that's going to keep expanding. And what's happening is that Congress or the Treasury has given them, I believe it's about 75 billion, and they have 10-to-1 leverage to purchase on that. So they could purchase up to 750 million, and I think that's going to expand. And then the Main Street lending facility is supposed to help the consumer. So that's coming in June. So they do this by purchasing ETFs, at least on the corporate side, which I will get to in a little bit. But they're also purchasing the bonds still. They're also still purchasing the mortgage-backed securities. They're also still doing all these lending operations. They're still doing the repo markets. All of these things are going on because the banks don't always follow what the Fed's lead. So the Fed has to go around and do these other operations when the banks are acting stubborn to increase the liquidity. So hopefully that kind of answers that question. It's a complex answer.
That's good enough for me, my friend. You've got the mic. Continue on.
Sure. So I'd like to start with this picture here. I like to show subscribers the evening skies, and this was a picture here of Venus and Gemini. Venus and Mercury conjunct in the sign of Gemini. So, if you go out to the west sky, you can still see Venus, and
that's cool.
Yeah, it's really neat. Yeah. You can see, and this was a picture here on this lake. This was Venus, and because it's retrograding, it's close to the Earth, and then it'll make an inferior conjunction soon here.
Yeah, Venus is the morning star.
Well, in this case, it's the evening star because it's set in the evening. But I mean, it's because it's retrograde. It is so close to us right now. So anyway, all right. So what I'm going to do is I'm going to talk about the newsletter services very quickly. I'm starting 3 new newsletters. And this is by demand of people. I've had the S&P newsletter, of course, but I'm starting a metals newsletter, currencies, and cryptocurrencies. These are coming out June the 1st, so I'm getting a lot of emails about how to sign up. They're not out yet, and I'm writing them every single day. It's taking a lot of time, but I think we're going to get there, and it's going to be very exciting. And I have these new indicators coming up, this new CAT indicator, which I'm going to talk about, and you'll get to see some of this. I've been sending these charts out early this month, too, complimentary to people, just to get an idea of what it's going to look like, but the actual newsletter comes out June the 1st. So just to put that out there for everybody, if you have a specific area that you want to focus on, that's what I'm trying to do. Because the more and more I talk to people, I realize everybody has their own different niche that they're looking at in the market. So we're going to start out here by talking about the fear and the greed index. So this is an indicator of sentiment. This is one indicator of sentiment, and it is by no means in an excessive bullish or greed mode here. Okay, so when this turns green, gets to these extreme values, that's when the market tends to reverse lower off highs, and when it goes to extreme fear, that's usually when the market's at a low. It's only at about 54% right now, which is not very high, so that bodes well for our rally to continue up here. This is another graph here of the fear and greed over time. You can see that this was the high right here in January, right before we turned, before the COVID crisis. We came all the way down, and these are near the March lows here. And you can see that we're still just kind of in the middle of this range. So This is a good sign. I mean, you definitely wouldn't want to see it up in the high 90s right now. So this tells me that the rally has some good room to extend. That's one measure of sentiment. And then this is another one here. This is the put to call ratios, and this is on the CME. You guys can see this. This is a heat map, and this was last week. And you can see that the puts here are still outpacing the calls. So there's more people betting that the market's going to go down. And this was last Sunday that I posted this on a webinar on the YouTube channel, the Wolf Trader Futures YouTube channel. So this definitely says that there's more room to go higher in terms of the sentiment too, because most people are expecting this market, they're betting on the downside, which is good for the bullish case. As Bill Meridian was saying yesterday, I think he was spot on with his forecast. He was very accurate, I think, with pretty much everything he was saying. And this right here, this is the change in the open interest. And you can see that the puts had the 136% increase where the calls only had a 20% increase. And then and this is 25 days out. And then 18 days out, you had even higher lopsided numbers for the puts. So this is a sentiment factor that is bullish for stocks. So for those of you who follow, we're moving up to about 20 symbols now that we cover. And so when you see these charts, they're going to be color coded. So like when I post a chart for you guys, you'll see the whole chart will be in the color of the symbols. So this is for the gold package here. But when you get these charts, if you subscribe to any of these newsletters, you'll see these specific colors. So this is the S&P right now, and since about May the 19th, this is when this went into the last buy pattern. And I look at two major things here. I look at the Fed juice, which is this red arrow here, and I look at the planetary speed index, which is this black arrow here. And when both of them are lined up to the upside, we get what I call an upside advantage. And the market tends to move with the least resistance. So the least resistance right now is up, and things are looking very good right now for the S&P. I really like where we're at. I think we're in a good place. The Nasdaq is pushing to near new highs, and you can see here this clustering of buy arrows into here around from the 17th, 18th, 19th, and the 22nd. So we really have a very strong alignment right now to the upside. And I think that's going to continue until probably around June the 1st. And then, we'll see for the next pullback. There is a pullback coming into June on the planetary speed index, but we have to weigh and balance what's happening with the Fed versus the planetary speed index, because really what we're looking at is a tug of war. So, for example, if the Fed is a plus 10 and the planetary speed index is a minus 7, then you're going to get a net effect of plus 3 on the market. And so what I measure here with this Fed juice here is a measure. It's kind of like the balance of power. How is the market able to rally in relation to what the Fed is doing? Okay, so it's an interaction between the two. So I'm looking at this number here. I'm trying to provide for the subscribers what is the net balance of this market, and right now it's positive. And so
We'll take a break here. We'll be right back, Shane. Hold on, please. 877-927-6648.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks. Shane, you want to continue, please?
Sure. So I don't like to really forecast out much past 2 weeks, a week or two, but this was the forecast that I put out on May the 19th. And I think that we're heading up to this June the 1st date. I think I put a cone out very similar to what you see like when they're tracking hurricanes. I think we're kind of moving up in this cone here. I think, June the 1st is the next spot we should be looking for a possible turn, but it may not turn. And I sent an email out last night talking about that if it doesn't turn into that second week of June, then you could have a melt up situation and new highs could be coming very soon here. Okay, so
Shane,
yes.
One of our listeners just made a comment. If you could do 30 minutes with a lot of probability, they would be happy, let alone 2 weeks. So go ahead.
Okay, no problem. This is very quickly here. This is an important chart. This is, and I track this. This is the spread between the quality bonds and the junk bonds. This is really important to heal these markets. Because the spread on this represents an illiquid market in the corporate bond arena, and we don't want to see that. That's a very dangerous situation. So the Fed had announced here this white arrow that they were going to buy the junk bonds, and the market gapped up. Now you can see here that when they started purchasing this, you see how the junk bond market started going right up right there? So that is exactly when the corporate credit facility started, and now this has crossed lower, which is a bullish cross for the S&P, which means that the money is starting to flow back into the junk bonds. So this is super important because they're healing the credit markets. This is a totally different area to look at, but you can't have a healthy stock market when the money's leaving and going to the bonds. So this is important, and so that is a direct effect. Now, Larry, you remember the other week when the market made that big run up on Monday, and you were telling the listeners, you were like, listen, it didn't want to go lower. When that happened, this is exactly when the Fed started these purchases on these corporate bond facilities. So that's that week that it didn't want to go lower. That's when this happened. So I just wanted to point that out to people. And on the weekly time frame, this is still just zooming higher on the Fed juice. So not really much changing there. Now, what I do want to talk about is this new CAT file. This is really important. And I put a video up on the YouTube channel. You can go there and see it on Wolf Trader Futures. This is a combined cycle and transit chart that shows turning points of the market. This is really, really exciting because it has been working so well on many symbols. I've taken by hand many different cycles, solar cycles, lunar cycles, percent statistics, transits, and put them together in one chart. And so these letters represent like the A, B, C, D, E. These are like, this is a buy, this is a sell, this is a buy, this is a sell. And when you look at the chart on how this did, in other words, this data was stopped on April the 30th, okay? This is the month of May. So this is what should have happened in May. And again, I've been sending these out to people all month just as a sample for the newsletter. But this is actually what it did on copper. These were the actual turning points that it did. And now copper, this was a really good example. They don't all look like this, but it more or less traced out the path on copper. So if I show them side by side here, you can see that on the first, there was this buy in the letter A here. It went up into the letter B here, which was the 8th here. It went down to the letter C here, which was the 14th here. And then this was across the weekend, this little bump into here. So that, this essentially stayed into a buy until the letter D here. And then it fell. It went into a buy until there. And then it went down, and then E was the buy on the 22nd. Now, it could always have just been, one symbol, but it played out also in the gold market. This was the gold market for the cat file. There was a very simple move. It was just A to B. There was no bumping around into there. And when we play out the gold market, you can see that it traced that out pretty much to plan also. So this is good. I mean, that you're starting to see this cat file work across multiple markets. This was the gold market. And again, this is all forward-looking information. I stopped all the charts on April the 30th. And I'll keep going here. There's just so many symbols to look at, but I would say 80% of them looked very good. Some of the currencies like the yen did not look quite as good, but I'm also doing the cryptocurrencies. And this is Bitcoin. Now, to me, this was the most impressive one because, you have so many turning points here that the chances of this being coincidence have dramatically dropped. I mean, take a look here on the Bitcoin. This is on the left side here. The letter A was on the first, okay, and then it went down until the second. So you can see here it was a sell on the first. It went down into the second, up into the fourth, up into the sixth here. Sold on E again here, down, bought on F. It almost had a perfect run here on the Bitcoin. So for whatever reason, Bitcoin has been following this cat master graph very well too. So these are just just gives you an idea of what's coming out in the newsletter. I just have this for many symbols, and they've been doing very well. Now, people have asked about the copper market. What is going to go on with the copper market and the metals market? So with the copper and the metals market, they are all coming into lows on probably in the end of this month of June, and gold is actually in a Jupiter transit. So what I mean by that is gold is in the first trade of gold is in the sign of Capricorn. So what happened here is this is the path of Jupiter. So as Jupiter is making a station and backing up here, what should happen is gold is sitting somewhere around 9 degrees here. So as Jupiter backs up here, that should be positive for gold into September. And most of these metals like copper, gold, and silver are making a low here into this part of June into here. So I know people were asking about that, but I think that these metals, gold and silver, they do have a chance here for some type of a midterm rally coming up. So we'll see.
Well, that sure agrees with the charts anyway. This certainly looks powerful.
Yes, it is. And sometimes you have to combine the natal charts or the first trade charts of these symbols with the solar cycles and the solar cycle of, like I said, of gold, silver, and copper. They're bottoming here in June. So there's a possibility that they could go higher also. So this was a chart here going back to the cat graph here. This was a chart here of silver. Silver also followed this transit very well. And again, this is a combination of the solar cycle, the lunar cycle, many different transits. So take a look here too. This follows more or less the path of an oscillator. So it kind of looks like it's going sideways, but the market can also be trending in these situations. So in the case of silver, when this came down into this A leg into here, and it went up into the B leg, okay, it was still going sideways as it was here on this chart. And then when it pulled back into the C leg here, it kind of looked like it was just kind of in a consolidation, but it actually pressed way, way higher up into these new highs on this D leg. So the thing to remember about these oscillators is that just because it looks like an oscillator on this cat graph, it doesn't mean that the market can't also go higher. But what we focus on is the turning point. So that turning point on that silver was on the 22nd here. And again, it's not a perfect high, but it did a pretty good job of catching the bulk of that run into there. So,
hey, Shane, stay with us and tell the folks how they can reach you. We'll be right back. 877-927-6648.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us, and Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Bam! If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We're talking with Shane Smolyan, the Wolf Trader. You want to tell the folks how they can reach you, Shane?
Sure, Larry. So you can go to the website, wolftraderfutures.com, or there's Twitter at WolfTraderFUT1. You can sign up there. And then there's also a YouTube channel, and I would recommend that you go there because what I'm starting to do is to put some smaller tutorial videos up on how to interpret some of these graphs. So I have one up on the copper graph, which I kind of zoomed through here on the show. But there's also a webinar I did there. I put it up on the YouTube channel. So it's just Wolf Trader Futures. And the webinar is it's almost an hour and a half. So it gives you a pretty good idea of what we do. And on the website here, when you go to Wolf Trader Futures, up here you'll see the pricing plans. Now, on June the 1st, you're going to be able to see, in addition to the S&P, you're going to be able to see the metals, the currencies, and the cryptocurrencies. So you'll be able to sign up for those newsletters. They're $39 each newsletter. I try to keep them all in small chunks so you can just kind of pick and choose what you want. And there's a 7-day trial on all services. And if you really want to go for all of the symbols, there's a gold package that we have that just covers all the markets. And that's really on Twitter. I post all day on that. But when you go when you become a gold member too, you get all the solar cycles for every symbol and lunar cycles and the cat files. You get these cat files for every single symbol if you're a gold member. But if you sign up for those newsletters, you're going to get a cat file for each specific symbol. So that's exciting. So you can just focus on copper, gold, silver, platinum, or you could just focus on Bitcoin or Litecoin or whatever you want to focus on. There will be a roadmap, like a very condensed roadmap for you to follow, and that should help you in your trading decisions for the month.
Boy, that's great. Hey, listen, we want to thank you for being on. We'll have you on next month. How about that? That's June coming up so close.
That sounds great, Larry. Thanks for your time. Thanks, everybody. Stay safe out there, okay?
Shane Smolyan, the Wolf Trader, folks. We'll be seeing you folks, I guess, tomorrow when we have Andy Pancholi, the Cycle Dude. He's got some really good stuff, and we'll be able to kick the tires on what he's looking at. So live every day in an attitude of gratitude, and may God bless.